Good day. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, September 12th, 2023, 6:20 p.m. Central Time. So it was all about Apple today. And what Apple did was, other than the Huawei event when they came out and they threw things off, traditionally, that's all I can say is, normally the week before, week and a half before, you get a conference from Apple, the market tends to rally, and on the day of the event, it tends to break. Well, today it did just that. By the end of the day, we were down about 1% in Apple, as it turns out. You tried the upside, didn't hold all that well, and then came down. So while we threw that off, now tomorrow we get a huge event. We get the CPI, and the market is looking for an increase in both core and headline CPI, but already there's talk, well, it's a temporary event. It went up because of blah, blah, blah. Okay. On Thursday morning, we get the PPI along with the European Central Bank monetary decision. They're in a real state of flux. The doves are very vocal. They do not want to see another rate hike. They want to do and wait and see if on its own things will fall. They realize the economy, they're all using that word they hate to use, stagflation, where they got slowing growth and inflation that is staying stubbornly high and gets bumps every now and then. They're looking at sharply higher energy prices into year end for them. And they think the doves that the worst thing you could do is now crush the economy by raising interest rates. You're already seeing the impact of that on Germany. I'm going to say Ms. Lagarde has a difficult time. Then for America, we get the combination of tomorrow's CPI and then retail sales coming out on Friday. After that, we go into the two-day FOMC meeting that begins a week from Tuesday. Well, not a week, 6 days from now. And on Wednesday, a week from tomorrow, watch out. It is, I guess, a week from today. And I always think because we're already in the Wednesday trade, it'd be a week from today that the two-day meeting begins. And then a week from Wednesday, we get the decision. This is going to be a big one. We'll see what the markets want to do. You backed off in the Dow. You couldn't hold up today very well. I'm watching a number of markets. While the dollar was up tonight, you're starting to get a good bounce in the euro, and you're flirting with losing embedded readings. That's important to pay attention to. Bonds and notes continue to slowly erode to the downside, which means real yields keep climbing up. That's very important. We then get over to the S&P. So let's just go right here. Oh, by the way, let me come back a little bit here. We had the grain report. I would call it a big nothing at the end of the day. The crops look large. It's going to be a question of what the farmer does. The market that's under the most pressure, according to Linn Associates, where I'm at, I'm a broker with them, they think that in corn, the 460 level could be a very key number in this. That's where they're thinking the door opens for a harvest low. They're not picking a bottom. They're telling you where the market may want to go to finally churn a low out of. We will see if that is in fact the case. All right. So on the S&P, the big question is the market has not even gotten back to the 18-week moving average of closes at 44.28. So the bias remains bullish in the market. When we take a look at what happened, you had this break in the market that went from the beginning of August down here, come back. Where's the weakness in September? Nobody's talking about it. But all people talked about 2 weeks ago was September's traditionally the weakest month of the year, blah, blah. Well, this is September 1st right here. Yes, we have dropped down from there a bit, but would you call this extreme weakness in one of the weakest months? Not so far. But it's the 12th. We have more than doubled this amount of time left till we get to the end. Where are we going to go with it? When I come to the charts here, I see higher lows, but lower highs. Do you see that right through there? Big problem for the market. Number two, back here, we had an outside day up. You took out the low of that, and you went right where you should have, back to the closest key moving average. You haven't had another outside day since then. If the market's going to turn bearish, you've got to take out this low right over here. If that's taken out, then you open up the doorway for 43.91. It's going to be a wait-and-see game right here. This is not giving you any edge at all, these charts. The battleground's clear at 44.59. Bollinger Bands are far away to the upside and the downside, and momentum is not overbought. It is drifted into what I'll call a holding pattern. This is one confusing chart. In the NASDAQ, momentum worked itself down and is officially no longer in overbought territory by the hair on its chinny chin chin. Any reading over 70 is overbought. So a good update tomorrow will probably get you overbought again, but you're not there right now. You have higher lows and, like the S&P, lower highs. Another one of these that can go either way. I'm going to say again, you take out the low back here, and both this and the S&P would turn instantly bearish, opening the doorways for to come down to lower numbers in this range. In the Dow, this has been the strongest of everything. It never was embedded. It was just a buy signal. And now you have an outside day. So let's go and take a look. What kind of day is it? This is an outside day down. And in looking at the market, I looked at it today, and on the rally today, I don't mind telling you, I had clients long in this market, and I told them to come out on the rally, and I said, why are we going to carry a position into the CPI number? That was my thinking. It had nothing to do other than I loved the chart action. The outside day down bothers me a lot. I get re-bullish, again, re-bullish, not even a word, but re-bullish, if today's high is taken out, because then it opens the door to the upper Bollinger Band. If the market starts down, well, then you've got to be looking at the 100-day average. I don't know that it's worth gambling on the CPI. The CPI could end up being a big nothing. The grain report, we were all waiting to see, would it throw out any numbers and have any surprises today? None. Could the CPI be that way? It's possible. We'll see what happens. I will say this. I'm wondering what retail sales are going to do Friday. You know, I saw this morning again, Redbook Group, and they're up another 4% in all the areas. The consumer's out buying. And that's a 1 week look at what's going on, not a 1 month. And if it's strong there and CPI comes in on the strong side, does that give the Fed the wherewithal to say, you know, that consumer's still strong, the labor market's still relatively good, I think we got to put the nail in the coffin. There's arguments I can make all the way through this. The most bearish looking of the charts is the Russell. It is underneath the 18, the 200, the 100-day average. At the same time, it has higher lows. It had a legacy of higher highs, but with the action today, I could argue lower highs, higher lows, oversold, total confusion on the chart. I'd expect that going in today, and I'm getting it on the indices. Then, as much as the bonds leak a little bit every day, this doesn't look like a market that's crashing. This is a market that's gotten oversold, hasn't had the wherewithal to get back to these lows back in August. It's worked down ever so slow. It's like watching paint dry on a wall. The bears are in control, but it's very dangerous to be short this going into that report. I can almost make the same argument in the 5-year. The trend is down, clearly. Lower highs, lower lows under the 18-day average, but oversold as can be as well. You're opening up that if you had a big bear report, the lower Bollinger Band both here and coming back, let me come back here one, to the bonds, that's a possibility. Can you get a buy signal in the market? You can't. You could get out of short if this high were taken out back here, and over here, if this high, let me come here. I want one too many. I want to come back to the 5-year right here. If this 116, 1650 were taken out, that takes you out of the bear trends. Barring that, you're still bearish, but very oversold. Oversold's the first step to getting a bearish embedded reading. I always tell you that, but it's the most dangerous time to be in the market. In the dollar index, you're still embedded, but if you get a reading under 79, you got to be out because then you've opened the door to get back to 104.03 and a half where the 18-day average is. Well, let me come back there. If you go up from here, The resistance is 105.32. Again, a dangerous time to be in the market. Let's go to the right here. I keep pushing the wrong button. I apologize. As we step to the euro, higher high, lower low. Now, what's it doing right now? It's flirting. See the flirt? Flirting with losing the bearish embedded reading. A close over 21, not 20.6, over 21 is a loss of that reading, and it often leads to a challenge of the 18-day average. The fact that it's over 20, though, tells me that the computer programs are probably not selling it right now. They're probably, if doing anything, some short covering, protecting in case they lose that reading, and they'll take another look as they get into Thursday's meeting. In other words, think of the logic. Why are we going through the report? Maybe we should back out of the market, and that's the lift in the market from a bear trade where maybe you end it. Got it? Makes all the sense to me, at least. In the British pound, the U.S. has its Federal Reserve meeting, the FOMC meeting, on the 20th. Bank of England meets on the 21st. Which way are they going? They have the same type of dilemma that's facing the European Central Bank. Weak economies. If they keep pushing it, how bad's it going to get? They have a nightmare in housing because of the way mortgages are set, which is very different than here. The U.S. is one of the few countries that have these 30-year mortgages. They have shorter duration. They come up a different way. The housing market there has got a real problem. And do they have an embedded reading? Let's count. Cannot count today because we don't know where it's going to close for Wednesday, but we certainly know where it closed Tuesday. Both numbers were underneath 20, both under 20. Day before, both under 20. So you've embedded as of today, Tuesday. That tells me on a good rally to the upside, the pros are going to probe the short side. And they'll come out if the red line closes over 21, and they'll look to cover, I think, at 124.55. If you've taken my enhanced Bollinger Band course, you know what? You know, there's a caveat with going short. Certain thing has to happen, and it's happening right now. We'll see if it stays that way. By the way, with me saying that, we have a few more charts that I want to go through. I want to remind you that we do have the live webinar that's going to be Thursday. I'll open it at 12:30 p.m. Central Time. Actually, I'm going to open at 12:15 p.m. Central Time. I'm all screwed up today. And at 12:30, I'll begin recording. I'll end at 12:50. You come in. How do you get there? Well, I've sent the invites. If you're not up to date with our mailing list, then you're not getting one. But that doesn't mean you can't join. Move your cursor on your computer screen right up to the top there. An icon will appear. Click it, fill out the form. You will then get from us an email. It'll have the link to come in, the passcode, because it's passcode protected. If you want to ask me questions on spiders, ETFs, or whatever, that's the spot to do it. During the conference, you can ask me futures questions. I'll answer them as fast as I can on the fly. Why? There are thousands upon thousands of stock charts. I like to put window envelopes on as many as I can because they're important. I can't do them on the fly in stocks and ETFs. They're already there on all the futures because I watch all the futures. So that is the reason of the difference, okay? Again, move your cursor up there. If you have questions, call my staff. All right. Now, we come into the Bitcoin. So in looking at Bitcoin, you lost the bearish embedded reading on the close today. Time to be gone from that market. Slipping back a bit, it's fighting the battle at the 18-week average, but the bigger battle is right here. The 200-week average, that is where the battle was really fought, and the market didn't have the strength before losing the bearish embedded reading to get to the lower band. Today was the defining day. I can tell you I had clients short. They came out of the chunk yesterday, and today they came out of the rest. They did okay on the trade. In Brent versus WTI, and everything I'm telling you is in the morning subscriber videos. So I have the videos to prove everything I'm saying as they go through, plus my writings at night. Brent versus WTI crude. Well, the differential, we've talked about it. It seems to be stuck in like a 15, 20 cent range. It's not telling me a story. So I just go here. Bullish as can be. You have an embedded reading. Embedded's the strongest signal you can get. It's it, period. So when you get this type of reading, you're looking on pullbacks to be buyers. And often, you got to take what they give you in that pullback. You're out if the red line closes under 79. Same with WTI, fully embedded reading. What about gasoline? Overbought. What else? I teach you never to buy over an upper Bollinger Band. You're not going to get me to change under any circumstance. It won't happen, all right? Because only 5% of the time when you stay over that, you're going to be able to come in at a better level underneath. Now, does that mean it's really going to be a lower level sometimes? No. If you keep pushing it up, like you're doing here, you're not as low as you were back here, but you are to the right-hand side. Would I tell a client to buy right here to get to the Bollinger Band? Get serious. Not going to happen. I'd rather not tell them anything. Natural gas. You're out of a downtrend here. Now, I haven't heard anything out of Australia, but we got to pay attention. The arbitration begins shortly there. That's what they've chosen to do. Their umpire, as they call it. We call them an arbitrator in America. They're going to have an umpire. And if they're smart, they get the job done. I explained it yesterday. Arbitrators are not judges. They're often, in the United States, lawyers, actually. And they apply the law the way that they want to see the law applied, not necessarily the way it has to be applied. They stick to it to a degree, but there's a lot of latitude. I like what Australia's got, all right? I think America should go to more of that. Arbitration is cheaper, and you get the job done. Courtrooms, the people that get richer than lawyers. I've been through it. I know what it is. And the lawyers will tell you that if you can settle, the smartest attorney you'll ever have is the one that says, let's find a way to settle this. If you think you have to be right, you got to fight it. But the cost of being right is expensive. That's all that I'm saying. That's how the American system is set up. So we put it all together. We're going to talk tomorrow. I can't wait for the 7:30 meeting. I'm going to be very, I can promise you, very careful tonight with trade recommendations. I'll be very aggressive tomorrow after the CPI number. So that's where things are going to head. You have a great evening. I'm Ira Epstein.